The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, folks, this is Larry Pesavento for TFNN 877-927-6648, and today we're going to do a little bit of go back in time a little bit, do a little history lesson. I posted into Tiger TV a chart of the 1987 market into October. It's a very informative chart, but what it does, it leads up to what is going on now in the markets, and I think it, if I'm correct, these things are mathematically fitting together rather nicely. But during 1987, we were in that monster bull market where the Dow went all the way up to almost 2,800, and it topped on August the 25th, 1987. That was a very big astrological day because we had 5 conjunctions coming together at the same time. But what's more important is what happened during the year, because during March to April of that year, the market experienced a very severe correction in 1987, and then if you'll go into Tiger TV and check that the correction between August and September, that correction was exactly equal. In other words, each of those corrections were exactly the same. I'm going to show you later on in the show that that's exactly what we have occurring now. Well, in September of 1987, the market had a solar eclipse, a new moon, in late September, and then it rallied into October the 7th, which was the lunar eclipse and new moon, and that was October 7th, 1987, and from October 7th to 1987 until October 19th, 1987, the Dow dropped 33%. And we're going to cover some of this a little bit later, but right now we have someone calling in from Minnesota. Ryan, are you there?
Mississippi, actually.
Mississippi. Okay, I'm sorry. They got it spelled wrong. So I have to tell them that Mississippi is M-I-S-S, not M-I-N-N. What can I do for you, my friend?
Yeah, listen, man, first of all, I really enjoy the show. I've been listening to you for about 6 months on the Internet, and I've got a lot of good advice from you and picked up some good things from you. I appreciate it. I listened to the interview last Monday with Bill Foster.
Yes.
Okay, and my question is this. I kind of agree with what he thinks might be coming up. I can't trade the futures. I could, but the brokerage firm I've got, I can trade the SPDR and maybe the GLD. What's your opinion on maybe using puts on the GLD and the SPDR in place of the future puts?
Well, I'm working with actually one of the people in the Tiger Den, which is a great place for traders to go for information. One of the folks in there is very good with OEX options, and I'm actually looking at an OEX 570, January 570 put. It was around 290, but I think we can get that thing for maybe $1 for this thing. It has to. I don't want to get too far advanced into this, but we have to wait until next Tuesday. That's the 28th, the day before the full moon and lunar eclipse. If the market's going straight up, which I hope that it is, into that time, that's going to set up one of the best trading opportunities that I've seen in a long time. It's not going to be very much. I mean, it's going to be a very, very low risk and a very, very high profit potential if it works. And the market can still be bullish and experience a severe correction because that's all it was in 1987. October 19th was the greatest buying opportunity of all time. Brian, on that day, there were 1,600 and some issues on the New York Stock Exchange, and I think there were 13 issues that were up. In other words, you had almost 1,600 issues down and only 13 issues up. That's how bad it was that day. And that was the best buying opportunity since 1982. So this could happen again. I don't know. But that's down the road. You got to wait till the 28th of November.
Well, in case it does happen and pans out like that, your opinion on maybe some SPDR puts and
by the January 570s, wherever they are, if they're up into the 28th of November, by the January 570s, no matter where they are, if the market's going up into that move higher than where we are now, just by the January 570s, they're going to be very cheap, and if they're right and this thing works, those could do pretty well.
Okay, and one last question. I've got some positions in Apple that I've been upside down in, and I'm trying to get out of them with as much as I can. Where do you see Apple going short term? And I'll let it go there, and appreciate your call. Take your time. Thank you.
Okay, thank you, Brian. Okay, last week the trade of the week that I was looking at was in Apple, and I suggested to buy the calls. We were looking at Apple around 540 when it was there, and I suggested the calls at that time, the January calls. And they held up relatively well so far now because they're in the money a little bit. But at that point, when the market was down so much, you don't want to go into the stock because the risk is too great. You have to risk about 3% of the value of Apple, which at that time was around $17 a share, and that I think is too much for most people to risk. So by buying a call, you can buy a call for around $400, and that's the best thing to work. And so far, it's starting to work. So anyway, I want to get back to what I think is going to happen. And remember, this is my opinion, folks, and one of the worst things that can happen to you is unfulfilled expectations. All of our frustrations come from expectations that are unfulfilled, whether it's with our children, with our education, with our job, whatever it is. You think something's going to happen and it doesn't happen, and you get frustrated because of that. So we don't want to tie too much of a mental energy into this potential that I see happening, but I have not seen one this so perfect mathematical in a long, long time. And over the course of this hour, I want to show you as much as I can. Now, the next chart that I'm going to put into Tiger TV is another chart showing that August 1987 setup, very similar to the one that we were just looking at, and it shows the solar and lunar eclipse move that had happened, and that's what we have possibly going on right now, and that's what we want to be watching. Now, another thing that's very important, and one of the reasons why we were expecting the market to have a really big rally today was the fact that the seasonality of the time that we're coming in here into the Thanksgiving week is the strongest seasonality of anything in the history of the stock market, going back 189 years, I believe. In other words, the day after Thanksgiving has a 78% chance of the market being up on that day. No day of the year even comes close to that. And the weeks after Thanksgiving, has a positive expectation too. Now, whether that happens or not, we'll have to wait and see. But these are the statistics behind it, and that's a lot of statistics. The one that I put up was from Miller Tabak, and it only goes back about 11 years. But if you look at all the history of this, it has a very positive day on the day after Thanksgiving. I don't know if you folks know this, but over the period of years, if you looked at every day in the stock market and you picked a day either up or down, one day is up, the next day is down, it is almost equal. They've had just a few more days. It's like 50.3% have been up days, and 49.7% have been down days, and they just didn't count unchanged days because they don't happen very often. But that's the statistics. So you can be bullish, you can be bearish, but the main thing is you want to be able to protect yourself and not risk very much, and that's the main thing that we're looking at. Now, I want to get back to the what I think is relatively important, and that is the harmony that we have in the stock market at this particular time. First of all, before I get to that, I wanted to mention what Basil said about the VIX. I'm going to put the VIX in there to show you my interpretation of it. Is the VIX should have been going up when the market was going down during this time, and the VIX could not go up. That was the first sign that something was telling us that this was not right. I mean, the market didn't want to go. I mean, the VIX did not want to go up. That means that a lot of people were just not afraid, and that they seem to be right because now we've made some type of a bottom in here. So we have to watch it, relatively closer. Now, the next thing that happened that I think is very important is we've been watching the transports very closely. And the transports completed a perfect ABCD coming in from the September to the low we made last Friday. So that's a perfect ABCD, and the market's been in a really strong consolidation range for a long time. So we're expecting a strong rally, to come out of the transportations also. So that's the second reason, why we're looking at some of these things. And the next one that I wanted to look at was the was the E-mini S&P 500, because we talked about this on the show last week. Some people brought it up, and we were highlighting it, and that was the importance of that 1,340 level. Well, if you take a look, if you've ever went into Tiger TV to look at these charts, folks, these are probably the best charts I'm ever going to put into Tiger TV. That I really believe that. And this is an incredible thing because it shows the equal move between April and May. Now, if you remember what I said about 1987, that's the same type of move that we had. We had an equal move down between March and in June of 1987, and we had an equal move down between August and November in 1987, just like we had now. Both of those moves are equal, and so this is why we have some similarities that are popping in here. Now, that's another reason to look at it. Now, the next one we want to look at is we want to take a look at the oops, just one second. I did something wrong here. I didn't get the full chart up. You wouldn't be able to see it. Okay, the next one is the cash S&P. The low on the cash S&P from the June low came in at the 61% retracement within just a few cents. I mean, that's nearly spot on. The S&P 500 futures were exactly equal, whereas this one was, right on the 618. So we have another reason for that being a very important bottom. I'm going to go through each one of these markets because they're all doing the same thing, just doing it with a little bit different number. Now, with the Russell, I put the Russell 2000 in here, and the Russell 2000 between March and May also made an equal type correction. This time it made a 786 retracement coming off of the bottom, hit it to the exact tick on the Russell 2000. On Friday, the exact low was a 786 of the May low. I mean, those were all of these are coming together. Every single market, folks. This is not random. There might be some rhyme to this, but it isn't random. That's for sure. Now, we want to look at the next one, which is going to be the NASDAQ, which is also, related to Apple, because Apple is around 20% of the NASDAQ. And this one, I've highlighted it, showing you the same thing, that we've had these equal moves in time and price between April and June and September and November. This is exactly what I featured about what happened in 1987, 25 years ago. And believe me, most of you folks were not around 25 years ago, but we got to remember this, because if this sets up like I think it has a chance of doing in the next 5 or 6 trading days, we got a chance for a home run. That's all I can say. It's not going to be costing very much if the market's moving up like we anticipate. And if it gets into coming up into next Wednesday, this is going to be an ideal situation. I want to be in on Tuesday. I don't want to wait till Wednesday because I don't want to miss it. I'll be doing the options, and I'll be doing the OEX, and I won't be risking much. And if it's right, it will make a lot of times. In 1987, those options made 500 times the amount of money that you put up. I don't know if it's going to do that this year, and I'm not saying we're going to have a CRASH. All I'm saying is we have a trading opportunity. That's all I'm saying. And it's lining up mathematically as nice as you could possibly ever want to see it. We've got to take a little break here to pay some bills. For our fearless leader, Tom O'Brien, may God bless, and I'll be back in a few minutes.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, folks, we're back, and I've saved one of my favorite things on the stock market for this last little segment here, and that's the New York Stock Exchange Index. That's the one that I follow the most as far as where I think the market is doing and what's happening with it, because of the fact that we have it has 6,900 issues for the largest capitalized stocks on the globe. So this is why it's so important. They can't manipulate this thing very much because it's just too big. They can do it with the NASDAQ because of Apple. But on this particular chart that I put in for the NYSE index, it shows that the move down between March and May was down 1,110 points. But the move from September to November only came down 692 points. Well, if you divide 692 by 1,110, you come up with 61.8%. That's telling you that the market coming down, the overall markets around the world that this index is made up of the major stocks, has only come down 61% of the move. Do you remember the NASDAQ made an equal move down, the Russell made a 786% move down, and the S&P made an equal move down. And so what's happening now is the rest of the market is actually a little bit stronger than it looks. This falls in line to what Basil was telling you about the VIX index. Why wasn't the VIX going higher during October, November? It couldn't take out the October highs, folks. That was telling you that somebody wanted to buy stocks, and they're certainly buying them today. Now, the question is, are they going to keep buying them into next week? Someone asked a question, can I start buying the puts now? Yeah, if you want to throw money away, but you want to wait until next week. Wait till the 27th or the morning of the 28th. I think the 27th will be fine, because those puts that we're going to be looking at, the 570s, is going to be very, very inexpensive. And so this is why we want to keep an eye on it. The trade that we have set up now in this particular thing is as good as a trade that we were looking at Apple when it was up around 690, 700, when it was making that huge butterfly pattern and made the island reversal. And, we were saying that, use the puts. Or, this is the time where Apple is going to, have a pretty good correction. I didn't know it was going to drop $200 a share. Nobody else did either. But, if you get some of these puts and they start acting that way, you just don't know. What we have going for us now, coming into this particular trade, is we have a symmetry like I've not seen in a long, long time. And not only that, but we have the history of 1987, where the market did the solar and lunar eclipse into November. At that time, it was doing it into October. This year, it's doing it into November. But all the similarities there. We've had equal moves to the downside in 87, just like we did now. And we also have the eclipses set up just like we did now. The difference is that we have a derivatives market that is beyond the wildest stretch of anyone's imagination. Warren Buffett refers to it as the weapons of mass destruction. And frankly, that could very easily be. It's been an amazing run of all the things that are out there now. But back in 1987, we didn't have these things. The chart that I posted to start the show was from the commodity perspective charts that I used to get, because, we didn't have all this fancy stuff, very easily. So I used commodity perspective charts to do all of my charting for all these things. So this is what we're looking at, but we have to wait until we get to the time of the 28th of November. That's really what we have to do. We don't want to do anything until that time, because it's just really not necessary, to really, to expose yourself to any risk at all. Because if it works, it's going to work. And the best part of it is the risk that's going to be involved is going to be so small. It's just like when you're buying puts on Apple at 700. Sure, you can buy a 650 put. You would have to pay nothing for it. Probably about $1.50, maybe even less. I don't know. And but I know that the 540s got all the way down to the 540 Apple calls got all the way down to, I think, $1. Maybe even under $1 just last week, and now they're probably $15 because the stock is almost $5.60, and they're $20 in the money, so they got to be moving pretty good. But that's the kind of thing you want to be looking at. These setups don't happen like this very often, and we certainly are going to have one come next Wednesday. I'll be on the show next Wednesday, the day before Thanksgiving, so we'll have a lot more information by that time. I'm just telling you ahead of time that we want to, start mentally preparing ourselves, not putting a lot of mental energy in it, because we don't want to get too many unfulfilled expectations. But if it lines up like it is, it's going to be like betting on upset against Man of War at Saratoga in 1919, and it was the only race that Man of War ever lost to the 99-1 shot called upset. Okay, folks, that's it. We got to take a little break here. We'll be back after the break.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks, and the next thing we want to take a look at is the Treasury bond market, because it also was, completing a big ABCD pattern. Almost a double top up at that 153 level last week, and that was also an indication, that if this was going to be a flight to quality, they were going to have to move a lot faster, and of course they didn't. They stayed in that narrow range for about 4 or 5 days, and have now sold off quite a bit. There'll be some support coming in around 147. And that's pretty much what we're looking at. I don't want to confuse everybody about what I'm seeing here. Okay, I spent a lot of time. I spent probably 20 hours on this newsletter this week getting it ready, which work I have to do anyway, so it's not a big deal, and I enjoy doing it. But I've never seen so many patterns coming together at the same time in everything. I'm going to go through several of them. This is the Treasury bonds in the crude oil, all of them, gold stocks, all of these. They're just they're all set up. You just put a big circle on your chart, folks, last week of the lows of wherever we were on the stocks, in the stock market and the stuff. And we go below that, we got big problems, because this was a major low that was coming, because there were so many mathematical confluences coming together that it's just you just don't see those that often. I mean, they were every single market that I looked at had it. And, it was right over that solar eclipse and new moon. And, so far it's done what it had to do. If it didn't come up very much today, then that would have been different. And if we go below the lows we made last week, all of this stuff is failing. That would be my assumption. So this is what we're this is what we're faced with right now, and so we want to keep an eye on that. I want to do the gold bug index first, and then I'll do the XAU also. But the gold bug index also hit a perfect 61% retracement on Friday. It's also started to move, a little bit in the right direction. I mean, it's just every one of these. It's just not just one. It's just every single one. And I get too excited doing this. I should probably do something else. Okay, and then we're going to do gold. You'll see gold is just it held pretty good, at the 382 level, and that still looks bullish. The silver still looks bullish, and all of them to me looks like they're doing pretty good. Now the XAU, which is the golden signal, the gold and silver index, also hit a perfect 61% retracement of the May low. In other words, from the May low to the 61% retracement to the high, back in October, and it's made a perfect 61% retracement on the downside today. And folks, if you take a look at these numbers, these are absolutely perfect. I mean, they went to the exact ticks. You're talking about something that's trading at $162 a share. I mean, this is really, I've never seen it this amazing. I'm sorry I get a little too excited, but I've not seen one this many with so many patterns doing the same thing. It's just one after the other. I mean, there's just, you just can't find them like this very often. That's why they're so very interesting to, to really look at. Now, silver. Here's one that looks very similar too. We came down, we made a 50% retracement when gold was making a 38% retracement. In the gold and silver index and the gold bug index, we made 61% retracements. So all of this is holding it together pretty good. Now, I want you to take a look at this double bottom and triple bottom that we have going on right now that happened in September and to January in the silver. If you'll take a look at that. And then you look at the triple bottom that occurred 6 months later. Now, we have a similar pattern occurring right now in the stock of Newmont Mining, and I'll put it up because we've been watching this stock very closely. Now, on this particular stock, we have a potential of a triple bottom just like we had in silver because of the fact that, we've had the double bottom that occurred in August, and we've had all the ratios and the other things hold up, the 618 or the 786s or the 50% and just about everything. But Newmont, for some strange reason, being a stock, has probably some things, but had a big gap down, back in November where it gapped down and had a, 20% drop in a matter of just a few days, actually 15% drop in a matter of a few days, and that probably prompted more selling, but the triple bottom looks like it's holding. So it looks like that 43 level is going to hold. We've got a call from Max in the Tri-Cities area of Washington. Are you there, Max?
Hey, how are you doing, Larry?
I'm good, sir. What can I do for you?
Well, you were talking about the trade of the century. And
whoa. No, it's the trade of the month.
Well, I backed off the millennium, but
okay.
But you mentioned you're going to do the OEX put options. And you were thinking of the 570s, but you didn't mention the expiration date that you're going to be looking at.
January. The January 570. You could probably you do the January because they expire on January the 18th, and these are going to work right away. They're not going to work at all. And I think that 570 is going to be trading for pennies at the time. I don't know where it's trading right now, but it should be trading for pennies. And when I checked it this morning, it was trading for $2.90. So it should be, under $1 by the time we get to the November the 28th. That would be my assumption anyway.
Okay. You also mentioned you were taking a back check of the Apple 540s, and you mentioned that they were like two and some change or something now, about $13, $14, $15. How often did you buy the front month on that, or do you buy usually 60 to 90 month out if you go?
No, I just what I usually do when I think I'm at the target, like we were last week. I usually just go give it 30 days because these things work right away. You don't have to wait for 30 days. They're either going to work right away or you're wrong, and you're paying such a small premium for them. That would be your stop level. So if you pay $5 for a put, that would be equivalent to a $5 stop on a $540 stock. So that's 1%. That's very, very cheap, and that's what you're looking for.
Okay, so if you see that setup, you don't have any concern of buying that front month and just, that's your stop. It goes the wrong direction, you close it out.
No, I try to keep it as simple as possible, the old KISS theory, because, this business is tough enough. But the way I see it setting up is the fact that, we do have the similarities between 1987 and Max, it could very well turn out to be the trade of the millennium, but I certainly don't want to call it that. I just think it's set up nicely, and there's not many people that were around 25 years ago that do the types of historical research that, Basil and I and some other people do, to remember these markets, and all I'm doing is looking at them mathematically. I'm not looking at any fundamentals or anything like that. I'm just looking at geometric patterns, and the fact that these are so perfect this time that it's amazing. This low that we made last week is you just circle that on your chart, because if we start going below that, we're in a really bad bear market. I can almost attest to that fact, because there's so many things hit it. All of these things can't hit it exactly like this very often. They do it major tops and bottoms, and this was a major bottom that we had last Friday.
Okay. Yeah, looking at the Jan 13 OEX, the 570s are currently trading at 310, and the Decembers, I think, were like 85 cents. So you think the Januaries are going to take a good plummet between now and then?
I think the Januaries, if we could get those under $1, which we could certainly easily do that if the market has any strength at all into the 28th. When we get there, we'll know. Max, that's all we can do. I would hope you come back on the early in the morning of the 28th on the show and chat with me, and we'll see where they are. I'll put the responsibility on your face. This is Max in Washington. I'll give them your phone number, and if they don't like it, they can just call you.
All right, well, I'll be hiding out in the desert with you if that happens.
That doesn't make any difference. TFNN has already traced this call. We already have your name and number up in Washington, so you're in big trouble.
All right, no, I look forward to it, and thanks, especially on the idea of that front month. I usually go 60 to 90 days. I've been hesitant to go front month, but I like your thoughts there, and I may be doing that with some of these trades.
Yeah, Max, it's going to work right away, or it's not going to work at all. You'll know when you come back on December the 1st whether this trade has started to work or not, because we have the day after Thanksgiving, which is usually a positive day. In fact, you could probably wait and put it on that day because of the fact that it's 78% positive. But you want to be short coming into that Monday, the day after the Thanksgiving weekend, because that's when the cycle should start to work. And if you wanted to play it safe, if the market was up strong on the December 1st, you could close it out with probably a very, very minimal loss. But I feel that the puts are going to be so cheap that you just I hate to use this terminology, roll the dice, but your risk is going to be very, very small.
All right, excellent. Thanks for your time.
Okay, thanks a lot, my friend. I appreciate you calling in. Since we were talking about rolling the dice, I want to talk about something here just off the cuff a little bit, and that is people have questioned a lot of times about the we've got someone, here I'm talking about gambling, and we got someone calling in from Las Vegas. I better listen to him. Ken, are you there?
Yes, I am here. Well, I don't have any advice about gambling. I don't gamble.
Good, me either.
Larry, thanks for your show. I really enjoy listening to you. And my question is, I know you're expecting by next Tuesday for the correction to start. And first of all, as far as if I'm buying puts on the SPY, I know you're talking about the 570. I'm not sure what 570 is on the SPY that is trading around 138 right now, 139. What would you be expecting? What kind of puts to buy on that?
Well, we want to be buying the January 570s is what we're looking at. I don't know what the relationship is on those particular things because it's different than the cash index itself. So I'm not sure how that works. All I know is the put that I'm watching from one of my followers in the Tiger Den showed me that was the one I was interested in doing. What I want something is very, very cheap, something around $1. And I think these would be $1 when we come around, the end of November, and that's what I'll be looking for. The only thing I can say is let's just not be too excited now. We'll look at it next Wednesday on the 28th, and that's when we will take a look at it.
And that's what percentage correction that you're expecting?
I think we're going to. If it's, I can't really say that, but we could get. we could get a 5% correction very quickly, or maybe 10%. I don't know. It could be something dramatic. We've got enough things out there to make these markets move. And all I'm saying is the similarities in the cycles are similar to 1987. The mathematics are similar to 1987. Whether it's going to work the same way or not, I don't know. All I know is that the profit is potentially very large and the risk is very, very small. It doesn't happen that way very often.
Okay. And one more thing. If I know we are up today, if we don't go up much higher between now and next Tuesday, do you think that setup still will hold? Or?
Oh yeah, that's even worse, because this cycle low that we had coming in this past week is a monster. There's a major low that happened last week, and if that low doesn't hold, look out. It's got major problems.
All right, Larry, thank you very much.
Okay, thank you for calling
Bye.
in. You bet. That was Ken from Las Vegas, and I wanted to talk a little bit about gambling versus speculation, because whenever I go to these conferences, people always say, you're nothing more than a sophisticated gambler. And believe me, folks, there is no comparison between gambling and speculation. Speculation comes from a Latin word speculare, which means to observe, and that's what we do. We observe these patterns of what we're looking for. In gambling, it is an event that is brought to life by people that are putting a game theory together, that there's got to be a winner and a loser, and just like we do in speculation, and they keep score with money, just like we do here. But the difference is a gambling event starts with a certain thing: the toss of a coin, the roll of the dice, the spin of the wheel, the turn of the cards, the toss of the ball. Something happens that makes the event start, and you can't do anything to change it until the event is over. Speculation is totally different. You can be in and out of the market in a matter of a few seconds if you want to be. You have control over it. You have control whether you want to continue for 1 quarter or 4 quarters. You can do whatever you want. You have lots of flexibilities. You can determine when you want to play, how much you want to play, and when you want to get out. When the gambling event, you do not have any control over it at all. And the other thing is that the gambling is always predicated on a negative outcome. In other words, they have point spreads and other things that are in the favor of the bookies and the house that they have in Las Vegas. That's how they build these fantastic hotels and casino. And we don't do that. We have control over what we want to do. We have to play a very small percentage of what we want to bet or speculate on. And that's what we're looking at. I used to gamble years ago. In fact, I did my MBA thesis on probability theories of a crap table just to see the theories of runs. That's how I got interested in speculation, was to look at the statistics behind it. And, the only thing I do now is I play a little bit of poker, Texas Hold'em, but, even that is, very, very small. But with gambling, this is not what we're doing here. We're observing. We're observing a whole lot of things happening in the markets, and whether they're going to fulfill the way we want them to or not, we don't know. But the good part is nobody else does either, folks. That much I can promise you. Nobody else does either. Okay, let's get talking about money now, because we are talking about the U.S. dollar when all these things are calculated, and we completed a perfect ABCD pattern in the U.S. dollar index, coming in at the 50% pattern. We're going to cover that after. Boy, this time going fast today. Okay, folks, we'll be back in a minute. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. And I want to end the show by giving me a quote from my good friend Jim Twentyman, who just Skyped me, and it reminded me of something. I've given you some information here today I think is pretty good. And the only problem is you got to do the work yourself. Defy human nature and do the work yourself, because if you do it yourself, then you're going to be able to feed yourself and not just I'm trying to give you a fish this time. If it's going to work, I don't know, but hopefully it'll stimulate interest in geometric patterns and pattern recognition and the numbers of sacred geometry, of which the Fibonacci summation series is part of. But it's just mathematics. That's all, and it's simple mathematics. This is not calculus. This is not, rocket science of anything like that. This is just addition, subtraction, multiplication, and division. That's all it is. Simple time counting, using some common sense, and learning how to try to put a risk parameter on the trade that you're looking at. And that's what I'm trying to show you here is a trade setup. This is all I'm trying to do. I'm trying to be a little more emphatic about this one because, frankly, I haven't seen many things come together like are coming together now. The symmetry that is in all the markets, every single one of them, is just really amazing. I don't know if you've ever seen my newsletter or not, but this would be a good one to start with because it's got some really interesting patterns in there. If you studied them yourself, you'll see that the history and the rhythm of the market has not changed in 25 years. It's exactly like it was in 1987. Whether we're going to get the same type of reaction like we had in 1987, I don't know. But all I know is it'll be a very low-risk trading opportunity. And also we have going for it is, you buy on the new moon, which was last week, and you sell on the full moon, which is, the 28th of the month. And then, of course, you have the day after Thanksgiving, which is the 30th. And that will really be an interesting day because of the fact that we have, real interesting time to come together here. So we'll see if this is the way it's going to work. Wait a minute. Day after Thanksgiving. Yeah, it's the Wednesday after Thanksgiving. I was right. It's the Wednesday after Thanksgiving. That's what we want to be looking at. So we have a whole week to wait and see if this is going to work. And the market exploded out of the bottom, which is what we needed to do. And that's what we're looking for. Someone asked me, what would be the price objective of Apple. All you do is you just go back and look at the price of Apple and see where it was the last time it had a good rally, and it'll repeat whatever that rally was. So I'll take a quick look at it here, and I'll see if we can find it. Yep, there it is. And the last time Apple had a good rally, it rallied from 623 to 632. We've already exceeded any rally that it's had since the September rally, folks. That's how much this market has taken off in Apple. This is going to make at least a 382 retracement of the whole move, and that would take Apple to the at least to 580. That's going to be the minimum price objective on Apple, 580. And people say, I don't know if it can make it. Folks, it went from 504 to 560 in a matter of a couple hours. You think it can't make 580? The chances are it's going to make the 61% at 629. That's what it looks like to me. I would say 629. So, it might be one of those. We don't know. All I know is we got some time to look at it. That's going to be at the end of the week of the 29th. Actually, the full moon lunar eclipse is on the 28th, and that's when we're going to be looking at this stuff. I'll be doing more work on this, and then we'll see if some of the great minds of Wall Street find something else to go wrong with the trade, and we'll let you alert to that fact. But that's what we're looking at, and we think that it's got a pretty good chance of happening. But it'll be a low risk trade under any circumstances because we're going to be doing a put. You don't have to worry about putting any stops in because the value of the put is what you're going to be risking. You're going to be risking the whole thing, which will be about $1 or $2 a share would be my guess. That's it, folks. Live every day in an attitude of gratitude, and may God bless.